I'm speaking with Rachael Lockyer, Head of Australia at MLC Asset Management. Rachael, great pleasure to have you joining us here in Queenstown, coming back to New Zealand for a few days.
Thank you, James. Fantastic to be in this beautiful country.
It is, certainly. Rachael, looking back on your private equity career, what are some of the really key lessons that have shaped your approach to portfolio construction today?
Yeah, look, James, it's really the people managing the investments that drive the performance. And this can often be overlooked when you're looking at numbers on a page, but really understanding the people who are working with the management team to fast track value creation during the life of a private equity investment is critical from my perspective, and understanding their alignment with you on that journey. So that should be set up through financial incentives and their long-term program for their business. That's been the key, really. When I look back at the most successful investments, they've been led by private equity managers who are super aligned, and also management teams who are hungry for that success and who have driven a fantastic culture in the organisations in which they're working.
What about the overall landscape in private equity? How have you seen that evolve over your career, and what considerations does that bring for wealth firms who are considering allocating to the asset class right now?
Yeah, so historically, if you look back 10 years ago, private equity was really the domain of institutional investors. Over the last 5 years, it's really opened up and democratised, people say, to allow the wealth channel to access private equity. And that means they get the return, but there's also risks inherent in the asset class, which they need to understand. Private equity is illiquid, and to be working with managers that are really aligned to get that long-term value creation is critical.
You place really strong emphasis on operational efficiency and value creation within the portfolio companies. Why is that such a critical lever in delivering the long-term returns that PE creates?
Yeah, James, operational improvements are the one thing you can control in a private equity investment. Multiple expansion and the benefits of leverage, financial engineering, which will go to your benefit if all goes well, but fundamentally it's the value creation plan that has built over months of due diligence, spending a huge amount of money on really understanding the business before you invest, that gives you faith that you can deliver the outcome that you are seeking to get over the life of that investment, and that's through a series of operational initiatives with a management team that's hungry and aligned. Over the history of our portfolio, we've seen that the bulk of that equity value creation occurs in the first 3 years when the EBITDA is fast-tracked through the transformative first institutional capital that private equity provides to these small privately owned businesses.
As private equity becomes more accessible through the wealth channel and higher end of the retail market, what do you really see as the key opportunities and potential risks as the asset class develops further?
Yeah, it's a great opportunity for the wealth market to get into private equity. Private equity returns have historically been the largest returning asset class in many portfolios for institutional investors, and this compounds over time, so it's very valuable in a portfolio. Additionally, the valuations are less volatile, so it has a nice smoothing effect to people who have a lot of public markets exposure in their portfolio. As we've seen recently, public markets have been extremely volatile. Now, looking at the risks, it is a long-term asset class. You get the returns with risk, and that risk is your capital is typically utilised over a period of many years. So investors need to understand that the liquidity that they want needs to be there when they need it. So having a look closely at where they're investing and whether that liquidity is available in the time frame in which they need it is important.
Rachael Lockyer, MLC Asset Management, wonderful to be talking to you here in New Zealand, the place of your birth.
Thank you, James.